All right, folks, my next guest says, look to the land of the rising sun if you want to get out your comfort zone and make some money. Joining me now, Bell Point Chief Strategist David Nelson. David, I know you like DXJ, but what was intriguing from your notes is that you were a skeptic. It seemed like you were a skeptic, and now you're like, they always say converts are like the ones who are most like enthusiastic. When they convert to something, like they become sort of the Pied Piper.
We really do have to get out of our comfort zone, and I think what's really killed it for us here in the U.S. is the U.S. dollar, because when you looked at your overseas investments year after year, you were just treading water because the dollar was killing the returns. But when you go currency adjusted and you start to currency hedge with some of these ETFs like DXJ. Japan is in a raging bull market, dwarfing the United States at this point, and we're just ignoring it.
So when you talk about the currency adjustment, though, is that because there are other ETFs that folks use for Japan that I know of more than
if
DXJ?
They're not currency adjusted, you still made money, but a lot less.
DXJ is currency adjusted.
It's Wisdom Tree's currency adjusted. Yes, it's currency hedged. It's really what you're doing. And because when you back out the U.S. dollar, from the equation, suddenly the returns get a lot better. A strong dollar is death for your international investments. And a strong dollar can even hurt us here because 40% of S&P 500 revenues resides offshore.
And the bottom line, because I was reading your notes, that the value proposition, the investment proposition is a nation that for decades was
You're not paying up for this.
Where they were disinflationary, now they're going to be inflationary, which does wonders for earnings.
Absolutely. I mean, you go from deflation to inflation. It doesn't have to be a lot of inflation. A little inflation does wonders for the bottom line.
So when we put the chart up, everyone's looking like, golly, this thing is like a rocket ship. I wish they would have told me about this a year ago. This next chart we're going to have, though, speaks to chasing, right? And this is sort of because a lot of times when the market hits an all-time high, first thing people say is, I'll wait. The cumulative returns on the S&P 500, 1 year after hitting a new high is 13.7%. Any other day, it's 11.9%. 2 years later, it's almost 29%. 3 years later, it's 48%. So this chart on the screen sort of suggests don't let all-time highs spook you out of the market. It should kind of draw you into the market.
It should. It's really confirmation that your strategy is working. If I got out of the market or a stock every time I hit an all-time high, I'd be out of business. It's really a signal that things are going well. At some point, you'll get in at the top and you'll pay for that. But if you're going to try to wiggle out of this market and try to protect the downside so much, if you don't have a rules-based approach to do that, don't do that because you're only going to hurt yourself because getting back in is a two-step process. You got to sell right, but what's the catalyst to get back in? Right. I guarantee you it's not down 10%. You're going to think it's going to be down 20.
Right. You're going to keep saying, and you're going to feel good, too, initially. If
You'll get back in at another all-time high.
I know, but you're going to say, all right, down 5%, I'm glad I sold. Down 10%, I'm glad I sold. Down 5%, well, when it comes down 10%, I'll buy, right? I mean, we know the psychology of it. Next thing you know, to your point, you're buying higher than you sold before. Before I let you go, you like General Dynamics here.
I do. I saw the tragic news over the weekend. We lost 3 servicemen, dozens injured. It shows that the threat level around the world is pretty high. So I look at the defense industry. I like General Dynamics above the others because of the aerospace, the commercial aerospace component. That kind of smooths out the ride for me. The Gulfstream 700, it hasn't been certified yet. When it does, this is going to be a really strong stock.